This is a certified fraud examiner bringing to you latest scams that may impact you. Let's learn how to avoid and recover from them. Today, we are looking at 3 recent scam reports. One uses artificial intelligence to make impersonation more convincing, and other uses professional credibility to obtain a large payment. And the third exploits demand for a popular concert. The technology and circumstances are different. The underlying fraud pattern is remarkably similar. The victim is encouraged to trust first and verify later. The first warning comes from police after reports of AI-generated phone scams using the voices of people victims may recognize. The report callers have impersonated law enforcement. They've also impersonated people such as bosses, pastors, neighbors, and business owners. The technology changes the credibility of the phone call. Previously, hearing a familiar voice could provide some reassurance. That assumption is becoming weaker. The reported police scam follows a particularly effective psychological sequence. The caller claims there is a problem. Perhaps the victim missed the court date. Perhaps there's an outstanding warrant. Perhaps there are unpaid traffic fines. The victim is then told that the money must be paid, and the requested payment method can be Bitcoin or gift cards. This combines several classic fraud indicators. There is authority, there is fear, there is urgency, and there is an unusual payment method. The AI voice is simply making the first part more convincing. That distinction matters. The technology is not the entire scam. The underlying mechanism is impersonation combined with pressure and an irreversible or difficult to recover payment. The voice makes it easier for the criminal to get past the victim's initial skepticism. And that is why recognizing a familiar voice is no longer enough. The safest response to an unexpected demand from law enforcement is not to argue with the caller. It is to end the conversation. Then verify the claim independently. Use an official phone number obtained separately from the call. Do not use the number supplied by the caller. Do not assume that because the caller knows personal information, the call must be genuine. Personal information can be exposed through many sources. The same principle applies when the voice appears to belong to someone you know. Hang up, contact that person through a channel you already trust. If a supposed emergency is genuine, independent verification will still work. And if the caller demands Bitcoin, gift cards, or another unusual payment method to resolve an official matter, treat that as a major warning sign. The pressure is designed to prevent the verification step. Your objective is to restore that step. The report cites more than 900 million in AI-related scams, losses in internet crime-compliant data generated in 2025, while also noting increased concern about scams targeting older people. If money or personal information has already been provided, preserve the call and payment evidence and contact the relevant financial institution and authorities as quickly as possible. But AI is not necessary to make the fraud convincing. Sometimes, all a scammer needs is a professional-looking profile and a homeowner who believes the credentials are real. Home improvement fraud can turn a project into a financial disaster. The second case concerns a family that wanted to build a new home. According to the report, they spent $250,000. They ultimately found themselves bankrupt, living in a camper and still without the home they had planned. The people they hired reportedly presented themselves as architects and remodelers. They also had a polished social media presence. The detail is important. A professional appearance can create credibility without proving competence. A social media profile is not a government license. A photograph of previous work is not proof of insurance. And a confident sales presentation is not evidence that a project will be completed. The report identifies several warning signs. One is a supposedly limited time bargain involving leftover materials. Another is a demand for cash or prepaid cards. Another is a request for more than one-third of the project price upfront. There can also be pressure to use a mysterious lender connected to the contractor. And there is the most basic warning sign of all. A contractor who refuses to provide evidence of licensing or insurance. The danger becomes larger as the upfront payment increases. If $5,000 is transferred before the first stage of work, the homeowner has exposure. If $50,000 or $100,000 is transferred, the consequences can be dramatically greater. The report's broader figures illustrate the scale. It cites 81,925 home improvement scam reports in the United States during 2024. The median reported loss was $1,800. And the report notes that home improvement was among the costliest scam categories by median loss. The most important verification should happen before the contract is signed. Check the contractor license through relevant government database. Do not rely exclusively on a screenshot or documents supplied by the contractor. Verify insurance coverage independently as well. The report specifically distinguishes insurance from a surety bond because they protect against different types of losses. Then obtain multiple estimates. A legitimate contractor should not need to prevent you from comparing their proposal with competitors. Look at the scope of work, look at the materials, look at the payment schedule, and require an itemized contract. The report states that upfront fees for many contractors commonly fall between 10 and 30%. Although circumstances vary and some smaller or custom material projects may require more. The important point is not a single universal percentage. It is whether the payment demand makes sense for the work being performed and whether the contract clearly explains it. Verification should come before commitment, not after the money has been transferred. The reported 81,925 home improvement scam complaints in 2024 provide a clear historical signal that contractor fraud is a recurring consumer problem, not simply an isolated incident. If you suspect fraud, preserve contracts, advertisements, communications, invoices, payment records, and credential claims. Then contact the relevant financial institution and consumer protection or law enforcement authorities. The first scam removes the contractor entirely. There is no renovation, no construction, just a ticket that may never exist. Police recently reported multiple concert ticket scams targeting buyers looking for tickets to a major event. At least 5 cases were reported over a 2-week period. The report losses were at least $3,500. The mechanism is simple. A buyer sees an online advertisement or listing. The ticket appears available. The buyer contacts the supposed seller. The seller asks for an advance payment. In the reported cases, payments were made through bank transfers or a peer-to-peer payment service. Then the transaction breaks down. The ticket does not arrive. The seller becomes unreachable. And only then does the buyer realize the transaction may have been fraudulent from the beginning. The important red flag is not simply that the ticket was sold online. Online marketplaces can contain legitimate transactions. The problem is the combination of an unverified seller, advance payment, and pressure created by demand for a scarce item. Concerts are particularly useful environments for this type of fraud. The buyer already believes there is competition. They already believe the opportunity may disappear. That makes the buyer more willing to escape verification. The scammer does not necessarily need to create a sophisticated fake ticket. They first need the buyer to believe the ticket exists. The safest approach is to separate availability from legitimacy. A ticket being available does not tell you whether the seller is legitimate. Verify the seller independently. Verify the transaction conditions. Understand what protection the platform actually provides. And be particularly cautious when someone wants to move the transaction into a direct payment arrangement. Do not let the sentence, "Someone else will buy it if you wait," make the decision for you. A genuine ticket opportunity should still be evaluated before money is transferred. And if verification is impossible, the uncertainty itself is important information. Police reported at least 5 related ticket scams and at least $3,500 in losses within 2 weeks, demonstrating how quickly a fraud campaign can exploit demand surrounding a major event. If you believe you have paid the scammer, preserve the listing and transaction evidence and contact your financial institution, the platform, and the relevant fraud reporting authority. 3 different situations: a police officer, a contractor, a ticket seller. Now consider what all 3 demanded from the victims. Trust, and usually trust under pressure. Before we get to the final tips, remember to hit the subscribe button. The common pattern across these 3 cases is not artificial intelligence. It is not construction, and it is not concert tickets. It is the removal of verification. The AI scam says, "This is the police." The contractor scam says, "This is a legitimate professional." The ticket scam says, "The ticket is available, but you need to pay it now." In each case, the fraud becomes easier when the victim accepts the claim before independently checking it. So remember 3 rules. First, verify the identity. A familiar voice, professional profile, or confident seller is not independent proof. Second, verify before payment, especially when payment is difficult to reverse or the other person is creating urgency. Third, act quickly if something goes wrong. Preserve the evidence. Contact the relevant financial institution or payment provider. Report the account, listing, or impersonation, and contact the appropriate fraud reporting or law enforcement authority. For educational and awareness purposes only, if you believe you have been a victim of fraud, contact your local police or the appropriate anti-fraud authority in your jurisdiction. If someone you know could benefit from these warning signals, share this episode with them. Thank you. See you in the next one.